Hello everyone. In this video, we will look into some of the expenses which are deductible on actual payment basis, and then let us just have a quick glance on some of the expenses which are allowed to be deducted under this particular head, and some of the expenses which are not allowed to be deducted under the head profits and gains of business or profession. Likewise, we will also look into some of the examples of incomes which are treated as business and profession income, and some of the incomes which cannot be, considered under this particular head. First, we will look into expenses which are deductible on actual payment basis if such expenditure are actually paid on or before the due date of filing of return of income. Okay, one is section 43B subsection A, any tax, duty, cess or fees under any law. Then section 43B subsection B, employer contribution to provident fund, superannuation fund, gratuity fund or welfare fund. Then 43BC, bonus or commission paid to employees which would not have been payable as profit or dividend. The next is in relation to interest on loan or borrowings from public financial institutions or state financial institutions. The next is interest on loan from a deposit taking NBFC or systemically important non deposit taking NBFC. The other expense that is deductible on actual payment basis is interest on loan or advance from bank, then payment of leave encashment, and some payable to the Indian Railways for the use of railway assets. All these expenses are deductible under the head profits and gains from business or profession on actual payment basis, provided they are actually paid on or before the due date of filing of returns of income. One thing you need to keep in mind, only the amount of any business expenses paid on or before the date of filing of income tax returns are allowed as business expenditure. The remaining amount will be treated as disallowed business expenses. So this payment has to be done on or before the date of filing of income tax returns. Now remember, every year the last date of filing of returns is 30th September. Okay. Let us look into some of the examples quickly so that whatever provisions that we have done so far in the previous videos in this series, uh, you will get an idea of which are the expenses which are allowed and which are not allowed, and which are the incomes which are treated as business or professional income and which are not treated as income under this particular head. First one is expenses or losses which are not allowed. So, which are the ones which are not allowed? Undervaluation of closing stock is not allowed. Overvaluation of opening stock is not allowed. Salary paid to any of the family members or friends are not allowed. But in case if family and friends are working for the business and then if salary is paid, in such cases, reasonable portion is allowed as deduction. Unreasonable part will not be allowed as business expense or professional expense. Then remuneration paid to non-working partner is not allowed. Household expenses definitely does not belong to the business, as such it is not allowed. Personal expenses also do not belong to the business or profession, as such it is not allowed. Expenses on vehicles, like for example the driver's salary or petrol expenses or any other expenses, um, if it is used for the business it is or profession, it is allowable expenses, but if it is used for personal use it is not allowed. Then loss on sale of vehicle, if this vehicle is not used for business then it is not allowed, disallowed. Loss on sale of shares is also not allowed in case if it is short term and if it is not related to the business or profession. Taxes which are not related to the business are not allowed. Property tax on non-business property is not allowed. If it is for the business property, then it is an allowable expenditure. Income tax is not allowed because it's a personal expenditure. Outstanding liability for GST, which is not paid before the date of filing of returns, is also not allowed. Before the date of filing of returns is not allowed. Then provisions, any type of provision, all types of provisions, provision for bad debts or doubtful debts or provision for depreciation are not allowed. All types of reserves are not allowed, whether it is any general reserve or whether it is special reserves. Drawings of partners is not allowed. Interest on capital given to the partners are not allowed. Donations are not allowed. Life insurance premium is a personal expense of the business owner, as such, it is not allowed. Capital expenditures definitely are not allowed to be deducted in profit and loss account. We all know profit and loss account has to include only the revenue items. So expenditure on acquisition of patent rights of purchase of neon signboard, etc., not allowed. Repairs of capital nature is not allowed. Revenue nature it is allowed. Capital nature not allowed. Depreciation is allowed, but excess depreciation is not allowed. Any contribution to recognized provident fund is allowed, but if it is unrecognized provident fund, it is not allowed. Employers' contribution towards the provident fund paid after the due date of submission of return income is not allowed. Then amount paid to the employee by way of contribution to pension scheme under section 80 CCT which exceeds 10% of his salary is not allowed. Then salary paid to staff or interest paid outside of India on which tax has not been deducted at source, okay, nor paid to the government, then it is not allowed. So even if it is salary paid to the staff of the business or interest paid, but if it is paid outside of India where the tax is not deducted at source or if the tax amount is not paid to the government, then it is not allowed. Then 30% of sum payable to residents on which tax is not deducted at source or it has not been remitted on or before the due date is not allowed. The same will be allowable in the year in which the tax is deducted and remitted. Then amount payable by the SSC which have not been paid during the relevant previous year in which the liability was incurred on or before the due date for filing of returns is not allowed. Amortization of preliminary expenditure or expenditure incurred under voluntary retirement scheme, only one fifth is allowed because as you all have seen, it is allowed as deduction in 5 equal annual installments. So one fifth is allowed, 4/5 will not be allowed. Fine or penalty paid for infringement or breach of law. But if it is in the form of penalty, in the form of damages paid for delay in completion of a contract, it is allowed. Since it is, in by way of compensatory nature. But if it is fine or penalty paid for infringing or breaching the law, then it is not allowed. Then all expenses related to other four heads of income, that is income from salaries, income from house property, capital gains and income from other sources, not allowed. Expenses paid in cash, okay, to a person in a single day exceeding rupees 10,000 will not be allowed. So if it is paid in cash and if it is more than 10,000 in a single day to an individual, it is not allowed. However, if this amount is paid through account paycheck or bank draft or ECS through bank account or debit card, credit card, net banking, RTGS, NEFT, IMPS, BEAM, other payment. If you're doing the payments other than cash, then it is allowed. Now those were the expenses which were not allowed. Let us look into those expenses which are and losses which are allowed. Loss of stock in trade by fire is allowed. Loss of cash by an employee through embezzlement is allowed. Advertisement expenses in the form of gifts to customers on the occasion of festivals or New Year it is allowed. Entertainment expenditure is allowed. Expenditure on promotion of family planning incurred by a company amongst its employees, it's allowed if it is in the form of revenue nature. Expenditure on promotion of family planning incurred by a company amongst its employees, if it is capital in nature, then one fifth of the amount spent is allowed in the previous year in which it is incurred. Balance 4 equal installments will be allowed in the next 4 previous years. Okay. Amount spent on a suit filed for infringing the trademark. Now, since it is a commercial expediency for security or registration of trademark, it is an allowable expenditure. Amount spent in connection with statutory income tax proceedings is also allowed as legal charges. Then amount spent on installation of new telephone connection allowed. Commission for securing a business order is allowed. Security deposit for telephone is allowed. Expenditure on maintenance of guest house used for business is allowed. Interest paid for overdraft for payment of dividends is allowed. Depreciation as per the rules is allowed. We already spoke about this additional depreciation. So additional depreciation at the rate of 20% of actual cost of new plant and machinery used in the manufacture or production of any article or generation, transmission or distribution of power is allowable expenditure. But 10% of the actual cost in case if the asset is put to use for less than 180 days. If it is used for less than 180 days in the previous year, then 50% of it only is allowed. That is out of 20%, only 10% will be allowed. Okay. The balance additional depreciation can be claimed in the following previous years. Then balance additional depreciation at the rate of 10% of actual cost of plant and machinery acquired and installed during the previous year and put to use for less than 180 days in that year. And balance additional depreciation at the rate of 17.5% of actual cost of plant and machinery acquired and installed during the previous year and put to use for less than 180 days in that previous year, provided the manufacturing undertaking is set up in a notified backward area in the states of Andhra Pradesh, Bihar, Telangana, West Bengal on or after 1st April 2015. Traveling expenses of a director of a company is incurred on a tour which is in connection with the negotiation of purchase of a new machine is allowed because it's for business purpose. It may also be treated. So another way of treating it is it can be added to, since he has gone to purchase, he has gone to negotiate the purchase of a new machine. These expenses can also be treated as a part of the cost of new machine. Okay. Then legal expenses incurred in respect of income tax matters, whether to an employee or an outside person, for filing the income tax appeal or preparation of income tax returns or giving tax advice. If any money is spent, legal expenses are spent, it is an allowable expenditure. Then compensation paid to the widow and children of deceased employee as per order of court is allowed. Compensation paid to an employee while terminating his service in the business interest is allowed, and expenditure on scientific research is also allowed. Moving ahead to incomes which are not treated as profits and gains of business or profession, hence it is not allowed. These are only some of the examples. One is sale of capital asset used for scientific research, not allowed. Custom duties recovered back from government, earlier not allowed as deduction is not allowed. Cessation of liability on account of loan is not allowed, and incomes from other four heads of incomes are not allowed. These are the incomes which are treated as profits and gains of business or profession. Recovery of bad debt, earlier which was allowed as deduction. If you're recovering the bad debt now, then it is an allowable expenditure. So as per section 41 subsection 4, where a deduction has been allowed in respect of bad debt or part of debt, then if the amount subsequent is recovered on any such debt or part is greater than the difference between the debt or part of the debt and the amount so allowed, excess only shall be deemed to be the profits and gains of business or profession. And the last one is refund of indirect tax from the department, which is allowed as deduction earlier. Okay, these were some of the examples of incomes which are allowed and not allowed, and expenses which are allowed and disallowed. Okay. Uh, with that note, I'll end this video. See you all in our next video. We will be solving problems under the head profits and gains of business or profession. Thank you.